Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today and this week. Market closed the day with 1.62% gain on the S&P. Nasdaq's up about 2.3% today. Dow 1.3%. VIX is down 7.5% there. Gold kind of flat. Bitcoin is up a little bit. So I think this is the level many people are wondering. I bet a lot of you and a lot of people, a lot of market participants are wondering, has the correction ended now? Are we ready to finally bounce and get back to new all-time highs? I think that's the big question that everybody's wondering. Is this the bottom, right? Are we ready for a rally now? Is that correction enough? Well, we're gonna try to answer that question through this video, and it is all coming up right now. So, you know what? Let's actually go to the 65-minute first, and then we'll follow up from what we've been talking about here this week on the daily update videos. So let's do a quick recap here. So first of all, before I do the analysis on the 65-minute chart, I want to say that I still want to label this market. So this is how I'm going to label this: micro to short term bullish, short to mid term bearish, right? So again, micro to short term bullish, and I'm talking about this right here, and short to mid term bearish. And I'm going to explain what that means. So basically right now here, so first of all, micro and short-term bullish, because we do have bullish divergence. And I was tweeting things out this morning. So this was this morning here. You can see that because of this rally we had yesterday, that made my oscillator not come all the way down to the bottom of its band, but stop short in the middle of it, right? And crossed up. This was this morning, right? And while the price made lower low, my oscillator made what? Higher high. That's what you call a bullish divergence, right? So I was talking about if we can able to get above my short-term moving average here, we can pretty much get to about 330, right? This was a midday. This is when I tweeted out, this is when price did get above my short-term moving average and clear that micro-term pivot resistance there, right? And this was end of the day, right? Towards the end of the day, we saw price continued higher, tag 330, and we faded a little bit. Why? Because my oscillator is getting into the resistance, right? It is no coincidence it was not able to go all the way back to 331, right? We kind of found resistance there because that's how much the buyers have their energy allowed with the current market sentiment, right? Because we're still in a bearish downtrend in the midterm, right? Not only that, we prematurely crossed down. We talked about this in the last several days, right? With that, we had that resistance going. And that's exactly where, we closed today. And it is no coincidence. Because every single day, what the market is going to do, market's going to make sure you're going to keep guessing, right? It would have been better, if we ended the day with the spike up. That would have been a breakout, and that would tell us that there's a lot of bullish momentum. Maybe there's a lot of energy to the upside. Potentially, we could continue higher next week. But what happened was you can see on my oscillator, we closed the day right beneath it, right? It is there. We didn't get above it. We didn't clear above this resistance on my oscillator, so that bulls and bears alike can be guessing what is going to happen, right? Is this going to fall back down, right, early next week, or are we going to break higher? All right. So looking at the price action here, right? I'll come back to the oscillator, but I want to talk about the price action real quick. This is the first, I do want to mention this. This is the first time my midterm moving average and my long-term moving average, they finally crossed down. My midterm moving average is now hanging around below my long-term moving average. Even back in June and July, we didn't see that happening right here back in June and July, right? Because the reason why I'm going back to June and July, because that was the last time we saw any kind of steep correction since the March lows. And that was at 8%. So you can see my midterm moving average, that's my long-term moving average. They never met, right? There was that space in between, right? So it's a much bullish sentiment, even though there are a lot of volatilities here. It's a little bit different scenario. It's kind of a cautionary signal in the short to midterm. This is why I labeled this market today short to midterm bearish, despite the fact that we did see a rally today, right? Short to midterm bearish because I see that my midterm moving average is curling down and continues to fall lower and now crossed below my long-term moving average. And this is the first time happening since the March lows, right? In the micro to short term, we do have a bullish momentum. We do have a well-defined bullish divergence. Do you guys remember my video a couple days ago or something like that? I think this was here, right? Just on Monday or Tuesday, right? I think just a couple days ago, right? Wednesday video, when the price was here, there was a lot of bullish momentum. I titled that video, "Bulls Need More, Otherwise," right? And then next day, you can see bulls were not able to get above it. And if you guys remember, I still gave it bearish in the short term because they did have some momentum in the few days of trading here. They needed to have more, and I explained it on that video what the bulls needed. And without continuation, we see that how quickly that gain got erased in just one day, right? Pretty much in just one day. The whole gains were eradicated. So we're kind of in a similar way. We're just in a little bit better situation, because of bullish divergence. So what we need to see is breaking out. And obviously I'll tweet this out on Monday. You can follow me at 2K Kim on Twitter and Stock Twits. Want to break out. And with that breakout, we want to see some big movement, and gotta fill this gap quickly. We need to reclaim. So buyers need to reclaim. Buyers need to reclaim my midterm moving average to the upside, and then start to cultivate higher lows and higher highs in that fashion, right? And we need to neutralize what? We need to neutralize down. Are we in a downtrend or uptrend? Downtrend, right? Lower highs, correct? Lower lows. What does that mean? That means we're on a downtrend. Definition of downtrend is lower highs and lower lows. What is the definition of an uptrend? Definition of uptrend is lower lows, or higher lows, and higher highs, right? That's definition of an uptrend, but we don't have that. We got lower highs and lower lows. So first, buyers will need to neutralize this downtrend. How do they do that? Well, we need to come up here, make this into a what? Equal highs. So if the price can get all the way back up to 340 and 42-ish, we can label this market neutral in the short to midterm. That's better than bearish. Once we see price going back up to about 340s here, neutralizing that downtrend into neutral zone, maybe see a pullback, cultivate higher low, and then get up, then you see with that, in that process, we got what? Higher lows and higher highs. You see what I'm saying? What I'm trying to tell you is it takes more than a day or two for the trend to be developed, right? So let's get back to the daily chart here. So we have a little bit different sentiment on the daily. As far as the structure is concerned, still bullish in the long term. Why? Higher lows, higher highs. Correct? Yes. What we don't know yet, though, is that we don't know if this is actually the low or not. Is that going to be higher low? We don't know until we see a bounce. Right? We could bounce a little bit and fall back. That's the thing. That's the problem. So we don't know if that's actually a legitimate higher low or not as of today. So let's try to analyze it. So what can we say about current price action? Well, we did see some, last couple days, some green candles there. That's not bad. A problem is, though, it is no coincidence we actually traded just beneath my second, kind of a midterm moving average on my daily chart here. So you can see my midterm moving average on the daily been acting as support here. It's been on the money since April and May and June. Right on the money. Every single time perfectly supported, right? We tried that. The bulls tried that here. Right? Back in September 11th. Tried that. We did see 3 days of bounce, but we failed, made lower low. So right now, the problem is, this is why I'm still labeling it micro to short-term bearish. Right? No. Sorry about that. Micro to short-term bullish, short to mid-term bearish. Why? We have micro to short-term bullish sentiment or bullish, that price action we saw last couple days, and we're gonna need more. We will have more information on Monday. As of today, as of now, as of this day, with the data that is at hand, we don't know. Problem is, potentially old support, previous support could act as resistance. It already did. So it's a second time trying. You can see on this day, this all happened this week, Monday, Tuesday, Wednesday. So this was Monday, this was Tuesday, this was Thursday, this is Monday. No, this is Wednesday, Thursday, Friday, right? This is all 5 days price action right there, right? So what happened was, Monday we threw that hammer, we continued to move higher, and things looked pretty bullish, didn't it? Things looked pretty bullish on Tuesday, but guess what? It was still trading below my midterm moving average there on the daily. And then look at next day how quickly that optimism failed. Now there's a little bit of fear that you could feel on the Wednesday. And then Thursday, we kind of swung back and forth, and Friday we're back at it. So now you can see there support, and then now resistance. And you can see my short term is curling down. My midterm is also curling down. Price is staying just beneath that. In the short term of things, this is in the vicinity of a lower low and still in the vicinity of a lower high. So that's why, right? 320 is, pretty solid support. Because you can see that's the level where we saw support here, some here, here, and here. and we've been hanging around all this week. So it's definitely level of interest. But the problem with that is when too many people are looking at the same level, nowadays everyone got their little charting software for free. Everybody's been drawing these lines. Everyone's trying to look at these levels to buy. And market sometimes, not always, sometimes market tends to bounce at an obvious level. Sometimes it does. We talked about this level though. This was definitely an obvious level, which I talked about back in June, right? But only thing was, there's still a lot of fear because of COVID. There are a lot of fear back in May and June, especially this thing crashing down like 7% in one day or something like that. You see this gap down and tanked. I mean, people still remember what it was like back in March. So even though this was pretty obvious support, in my opinion, which I talked about, but I think overall there is still a lot of fear with COVID and second wave and all that, right? And not only that, that was that rising pivot right here. Not only that, you look at my midterm moving average, right on the money here. And look at from here to 300 went to 360. That's a 20% move, right? 20% move in just about 2 months. That's a big move that we saw off of that. But again, there was still a lot of fear. I feel like we're kind of in that mentality where I feel like a lot of people are trying to get into this. A lot of people trying to be part of this rally. And a lot of those people who missed out the rally, they want to get back into it now. Feel like we're back into a primary term uptrend. It was very, very scary in April, May, and June. But after this kind of rally, and for the longest time, this market completely sucked out fear. Conditioned traders to be complacent. And we're back at that pretty prominent support. So sometimes market does bounce at an obvious level and does get back up, which I've seen that before. But I don't know why. Something tells me the market might be brewing something here, potentially create a little bit more fear before it can possibly go back to all-time highs, get back into the rally mode. So right now, I think we're at that kind of pivotal juncture. But I truly think we'll have better idea next week and the week after. Next few weeks will be very, very important. So obviously, we're going to be looking at the market every single day. I do the 65-minute chart analysis every single day for you guys. So we'll come back next week and we'll have much, much better idea, before we can make that conclusion that the market is now getting ready to get back up to the all-time highs and that sentiment switches back to bullish sentiment. We're still in that bearish sentiment, right? In that bearish sentiment in the short to mid-term with my moving averages declining now. So let's see if we can continue higher and reclaim some of those levels. I've just explained on this video what needs to be happen before market can neutralize this downtrend, right? Needs to cultivate that equal highs first, get rid of that lower highs, right? Because we still have that lower highs going on here, right? So those are some of the things we're going to look forward to if this market is ready to get back to the all-time high level. Let's go to Qs here real quick. Qs is similar, right? So you can see my short-term moving average has been acting as support pretty much this entire rally since the March lows for freaking like 4 or 5 months. That's been acting as resistance here. You can see here and here and here. It's been dancing around my midterm moving average. We're not in like obvious support on the Qs at this point, but we're trying to get back up here. But I think same logic applies on the Qs as well. You know, when I actually go to the this is actually the Q 65-minute chart, as you can see. So when I come here, you can see that we're still below my midterm moving average there. So the price, we're not able to get above my midterm. We're just right at it. So that'll be the first sign to look forward to if you want to see the sentiment changing on the Qs, is start surfing this up, using the midterm moving average to prop itself up. If not, if the midterm moving average continues to fall, if price get rejected in that vicinity, we could see some further decline there. So again, the overall sentiment is we're still in that kind of a short to midterm bearish sentiment with the micro to short term bullish move that we saw the last couple of days. Bull's going to need more. If not, if bull can't push early next week, things could get a bit hectic here. Let's go to diamond. So diamond is breaking some of these levels here. Let's just kind of move this down. So diamond is obviously diamond doesn't tend to respect some of the technical levels as much as the S&P 500 does. So you know, you can see it's kind of at a random levels at this point. But it's same logic applies here also. We still have higher highs on Dow also. You see that those are higher highs, these are higher lows. Is this gonna be the higher low here? See, that's we don't know that yet, right? So we need to, is this gonna be the higher lows before making it? We don't know that yet. Or are we gonna continue lower? Things get a little bit hectic, you know, when Dow continues to drop and maybe come down to this level to 255 or 250, 250s, because then that's gonna be like equal highs, equal lows. You see that right here? So if it does fall, it will be better if it can. You can see that my long-term moving average here. So if we do see a fall, pullback in the next couple of weeks, you want to see Dow maybe finding support around 255. That way, this low is higher than this low, so we can continue in that fashion, that higher lows, right? Because you can see when this thing fell here, that was definitely higher than this low. When this thing fell, definitely that low higher than that low. When this thing fell, well, that low is higher than this low. You see what I'm saying? Let's go to VIX here real quick. So VIX is not finding any kind of traction to the upside, but we are still hanging around above my midterm moving average there. You kind of don't want to see VIX hanging around, though, you know, because, I mean, here you see VIX hung around and then we finally lost it and then came down. I think there are a few instances where VIX could hang around and then like all of a sudden we see a you know, some kind of a move. But let's see if I can find any kind of a I mean, like, okay, maybe something like this here is not perfect, comes down and we start hanging around here, and then we see a little bit of bounce there. It's kind of hanging around, right? You know, above that midterm moving average there. But it's rather difficult to find perfect levels doing technical analysis on VIX, because obviously VIX is gonna be pretty volatile, and when things get volatile, when things get emotional, well, it's gonna throw all the technical levels out. So you really want to look at things in an overall perspective. So we're just kind of hanging around here on the midterm. Where am I? Here you go. So we're just hanging around here. That's the resistance. So if we do see a bounce, that's probably where it's gonna go. Maybe hit that one more time or something like that. Somewhere here, like 35 or so. If we lose it, you can see we got the gap support right here. Gap hasn't been filled actually. So that gap's been acting as support. It will be better for this equity market if VIX go and fill this gap. You know, if not in the next couple weeks, sometime this year, it will be better to come and fill this gap. But that's for another time. So VIX just hanging around here, kind of a neutral zone. Kind of like where, you know, I have to say like VIX has been actually holding up though, while the equity's been kind of coming down. Let's go to gold. So, you know, silver got hit pretty hard. As you guys know, I'm still not in gold or silver after I've completely exited my longs on gold, silver, and GDX, and some mining stocks up here. Because when you see, I mean, it's not just gold or silver. I mean, you see a stock, index, equities, or gold makes this kind of move, and you start to see this thing going vertical like this, and then now start to get all kinds of attention, right? Especially like major publications coming up with like gold, you know, unstoppable or something like that, you get out. As soon as when everyone starts chasing, when things get crowded, you get out, because when things get crowded, it gets crazy. And you can see it's, yeah, so now it's already at around $20 per share there on SLV. This is a potential support because we got this gap area here. So we'll see if that level act as support, and that's from this peak, right? This peak, there's a gap area, that support, that's potential. And we got pretty decent sized correction on silver. That's a 25% correction. That's pretty decent size. However, gold is, I think, only, what, like 8%? 10%. So, yeah, we're still pretty extended in the long term of things. I'd like to see at least tagging this long-term moving average there, you know, maybe 160 or something like that. Maybe see a steeper correction. I mean, so I'm waiting to see if we see a further pullback, since, you know, when you go to actually bigger time frame, let's say I go to weekly here, you know, that's gold on the weekly. So you can see we saw a big move, did we not? Right after breaking out of this, you know, big base, we saw a nice move. Is this gonna be like where we see a nice move and see a pretty steep pullback? Nice move, a steep pullback, or it's gonna be a nice move and then continue nice move? Which one? I don't know. Is this gonna be a nice move, steep pullback, nice move, steep pullback, or nice move and another nice move? See, I don't know. I see that. So the thing about that is that will be just a guess at this point. See, I don't think anybody does. But I think it's a little bit different, you know, because we had this long consolidation base. We finally broke out of that, and then we made the rally. Before we saw nice move and nice move, actually gold was been in a bull run since the 2004. So we made it 2004, continued to all the way to 2008. Once we got here, that was already like 6 years of bullish run. This bull run just started 2019. It's just about a year old. So that's something you want to keep in mind. Even though we saw nice move, but that bull run was aged with higher highs and higher lows. Aged bullish moves, and then we saw those some exuberant, right? That ecstatic move. So I think I'm kind of leaning more towards seeing something like this. I don't know about that though. Something like this, you know, maybe here. That's what I'm leaning towards to. Let's go to Bitcoin, and I'll end the video with this. So Bitcoin, I given you this possible scenario that you know, worst case scenario, we may see Bitcoin finally breaking below this level, create some panic. We actually filled the gap. That's where we saw some support there. So you can see now there's a little bit of fear on Bitcoin, grayscale Bitcoin, because everybody can see the support. We actually break below the support. Some people might even, you know, potentially short here. So, but I think there's a good chance, because I'm also kind of potentially anticipated this possibly happening. Maybe continue lower, create some panic before finally moving higher. Because I've seen these kind of panic. Because again, I'm still relying on the fact that we still got higher high. And I still think that we're still in the process of cultivating that higher low. Even if this thing comes all the way down to 990 and decide to bounce from here, this low is still higher than that low. And that's going to be considered as higher low. So that's kind of what I'm thinking here. And I'm still holding my longs that I went long around 1140 or so. And so we'll see how that plays out. Well, there you have it. So, you know, it's tricky. It's tricky to say that, is this the bottom? Are we ready to go back to the all-time high? I think there's a probability that we can able to do that. I just think that we're kind of in that. The only reason, because it's tricky to just say we're gonna go back to all-time high now, because we've already made such a great run. We already made that 65% move, and S&P is still positive year to date, despite the fact that it suffered just a couple months ago. It suffered 35% a couple months ago. The whole world was ending, right? And because of that, you know, that rapid movement that this market produced, I feel like there might be a little bit more correction might be stored, but we are trading in that kind of, you know, support level. If we can see little bit more push from the buyers, if we can do that and reclaim these moving averages, then possibly we can. But right now, I still want to be a little bit cautious in the short to mid term. So micro to short term, bullish. Short to mid term, bearish, right? So short to mid term, still bearish, and my mid-term moving average still curling down. We'll get a better idea. Market will give us more information next week. We'll go from there. Enjoy your weekend. Good luck trading next week.